Hey traders, welcome back to the weekly Forex Forecast. Next week is a huge week because we've got the US elections on Tuesday, and then on Thursday we've got the Federal Reserve with an interest rate cut, which is expected, 25 basis points. So there is going to be a lot of volatility next week. We're going to run through the markets that I'm personally looking at and I think offer the best opportunities, and we'll look at the directional bias in those markets as always. But just keep in mind, if you are trading next week, and if you are trading these markets, expect volatility, especially in the US dollar pairs, but I would imagine we're going to get volatility across all of Forex and even equities next week with the US elections. Okay, so kicking off with euro dollar. Now, next week, on balance, I am only going to favor short opportunities in euro dollar. We are correcting. We had this big sell-off, and this all looks like a one wave. We looked at this in previous videos, and it looks like we're entering into a second wave, because you also have the reversal pattern over here, this double tops. You break, that's the reversal, one, and now we're correcting. You can see the range is a little bit wider here, and that's because of the amount of expected volatility coming into next week with both the elections and also the Federal Reserve on Thursday. So next week is likely to be a very volatile week. What I'd like to see is I'd like to see euro dollar coming back and breaching the 1.1018, taking out the prior low here. That is going to be the perfect place to start to look. And with the volatility next week, you know, we're probably talking after the US elections. Any kind of trade before the US elections runs the risk of being on the wrong side of, you know, quite a big move. So after the elections, I would like to see if we could get the euro dollar pair rallying into and above the 1.1018. This is where I'm going to start to look for a potential reversal, not just for 1 or 2 days, but also potentially for a third wave down. This could be one that could be held for a longer period of time. So that's what I see in euro dollar coming up next week, but it's not my favorite pair. I do think there are better pairs to be trading. We're going to have a look at those in today's video. Okay, so if we look at the portfolio selection coming into this week, you can see clearly at the top of the list the Swiss franc and the euro, and then the only other currency here with a green wheel and a green arrow is the US dollar. So that would be number 3 to the upside going into this week. And to the downside, the Australian dollar, the Canadian dollar, and also the Japanese yen are the 3 with red performance wheels and red trend arrows. So I will be interested in shorting the Australian dollar as a primary theme, shorting the Canadian dollar, and also shorting the Japanese yen. Now, again, I have to reiterate, with the elections on Tuesday, Federal Reserve on Thursday, things can get volatile, things can change around. However, these are the pairs that I will favor positions in next week. The main thing to look out for is if we get a lot of volatility on Tuesday, you could see a number of these markets moving to their second upper and lower bounds. So one way to maybe manage that is to wait, as I said, for the election to take place, and then see if any of these go to their second or upper lower bounds. You could filter some of those first upper and lower bounds, or just at least see what the volatility is like. If you get big volatility, maybe, you know, be patient with the first upper and lower bounds. If you don't get tons of volatility, then maybe, you know, you can start to look at the first upper and lower bounds. So that's what we're going to be looking at heading into this week. Is a pretty clear-cut setup. We've also got an interest rate decision out of the UK next week, so the pound is off the list anyway, so that works quite well. So I'm going to be looking in today's video the markets that are on my watch list for next week. Aussie franc to the downside. We're also going to look at CAD franc to the downside and franc yen to the upside. We're also going to be looking at Euro Aussie to the upside, Euro CAD to the upside, Euro yen to the upside. And we're also finally going to be looking at Aussie dollar to the downside, US dollar CAD to the upside, and US dollar Japanese yen to the upside. And we're going to look at all the key levels in those markets today. Kicking off the watch list then, as always, is crude oil. I still favor shorts only in crude oil. There has been some escalating tensions in the Middle East, and there has been reports of a potential Iranian retaliation. This could see crude oil spike, but until it happens, we have to trade these markets as we see in front of them. So if you do get an escalation in the Middle East and you see crude oil spiking, you know, you might want to sidestep shorts. However, without that, heading into next week, what I'd like to see is the following. I'd like to see crude oil come up, take out the 72.63, and also take out this high. Once it does that, we essentially have this potential breakout to the upside, but we also turn overbought intra-week in a market that we should really be looking primarily for short. So if we breach this, I will be looking for a 1 or 2 day reversal as always, and these are the exact setups I trade in real time with members throughout the week. The second thing you can look for is if we break through the 72.63 and we take out the 75.93, this is the second place I'll be looking for a 1 or 2 day reversal to the downside. Why? Because we become extremely overbought intra-week. The odds of reversing to the downside, even for a day or two, are higher than they are at the first upper bound. And you might be saying, well, how do you know if it's going to hit the first or the second one? Well, if it hits the first one, you're not necessarily going to know at that point if it hits the second one. That's where your risk management comes in. However, if it breaks through here, if I'm already short, this is where usually I look to cost average for a 1 or 2 day reversal and exit the trade for a break even. That, again, is exactly what I do in real time with members throughout the week. So if we do breach there, that's the second place. If I'm not already short, this sets up a really good initial opportunity for 1 or 2 days to the downside. And the third thing you can look for is look for the moving average to kind of track it back, and we start to make our way towards the upper bound. And then you can look for that bear flag setup where you get the breakdown. It pulls back, the moving average follows it. It pulls back, kind of tucks into it, and then you can look for the sell-off, in this case, down to the 66.02. That is where we turn oversold intra-week in crude oil. So it's a great profit take-in target below this for any intra-week shorts in crude oil next week. In fact, last week we gapped down, we took out the lower bound, and once we took out the lower bound, that was where we got the reversal intra-week in crude oil last week. Okay, so kicking off the Forex markets with the franc pairs, starting with Aussie franc. We're already starting to break above the moving average. So this move down is running out of steam here, and then we start to reverse. So it's likely correcting. So I'd like to see this correction continue. I'd like to see us breaching the 0.5786, and people are asking me what these levels are. These are all from the Hedge-Quantitative Analytics platform. It updates these automatically every day, every month, every week. And this breach of this level, the blue level, means that we are overbought during the week. It's for that week, and then it resets at the weekend for the next week. So if we breach this next week, intra-week, say we do it on Tuesday, this is where I'd be looking for a 1 or 2 day reversal, because the odds are that we snap back inside this range, at least for 1 or 2 days next week if we trade above it. The second thing I'm going to be looking for, whether I'm short here or not, will be a breach of the 0.5867. Again, remember, the test of the gold upper and lower bounds, or the second upper and lower bounds, are quite rare. They're not expected to happen. They're more like backup plans. Because if we do take this out and we breach this high, this is actually a bigger trend reversal, right? Because we've got a high, we've got a higher low over here, and then we've got a higher high over in this area. So that would be a much bigger trend reversal. I don't expect it, but if for whatever reason we breach this, whether I'm short already or not, this would be the second place I'll be looking for a 1 or 2 day reversal above the 0.5867. And the third thing you can look for is that bear flag setup. We start to pull back, and instead of taking out the upper bound, you see momentum to the downside. Very much like this, but the opposite way. You break above the EMA, you pull back, and you test it, and you kind of rally, and that's, in this case, a bull flag setup. You can look for the same thing, a big sell-off, you get the initial consolidation into the moving average, and that's your bear flag setup, and you can look for a profit-taking target to the downside of the 0.5624 for next week in Aussie franc. Next is CAD franc. Very much like Aussie franc, I can only be short or do nothing next week. I cannot buy this market. So again, I would like to see this breaching the upper bound, in this case at the 0.6298. And if we breach this, we also have another nice high over here. So I like it when we get confluence. We turn overbought in a market that I'm looking to be short, and then we take out, a major prior high or a significant high. That gives us confluence to start to look for a potential 1 or 2 day reversal above this level. And what I'm doing is I'm usually dropping down. We breach this, I'm usually dropping down to the 1 hours, the 15 minutes, and I'm looking to time, a double top, a head and shoulders, etc. for that 1 or 2 day down. If we break through there and we take out the 0.6364, we turn extremely overbought intra-week. I don't expect it to do that, but if it does do that, whether I'm short here and cost averaging it, or this is an initial position, I will be looking for a 1 or 2 day reversal from above this level. And the third and final thing, as always, is that bear flag setup. And in this case, if you get the breakdown and you start to get that bear flag set up and you consolidate into the moving average, you can look for that down to, in this case next week, the 0.6167, great profit taking target to the downside in CAD franc next week. And the final franc pair is franc yen. Now in this market, I can only be long or do nothing next week. I cannot sell this market next week. You can see we've already started to correct, and I'd like to see this continue down. Now we've broken below the moving average. I'd like to see this continue down, taking out the 173.62. And what I like about this is not only do we turn oversold intra-week in a market that's making high highs and high lows, and I want to be long or look for buying opportunities, we also, in this case, retest this kind of almost double bottom. It's not quite, but this is the reversal point when it breaks through with momentum above this high. So we'd be retesting this. It's a good place. I would be looking for a 1 or 2 day bounce next week to the upside. If we, for whatever reason, unexpected as it is, blast through here and take out the 171.35, this would be the second place. Whether I'm long from here or not, I'd be looking for a 1 or 2 day reversal to the upside. And the third and final thing I'll be looking for next week, or you can look for, is intra-week. If instead of making it down to here, you get a strong market, you get a fast market and it breaks up, look for the moving average to follow, look for that bull flag set up into the moving average. And in this case, the profit taking target to the upside is the 178.17. So you start to trade above that, the odds of trading significantly higher diminish. So it's a good opportunity for intra-week longs to book profits. Moving on to the euro pairs then, starting with EurAusd, I can only be a buyer of this market next week. I really like the fact we have this high over here, and you can see this big kind of consolidation. We start to bottom and then we rally and we break this high as well. And these are the two key highs here. But look at this. If we start to pull back next week, we breach the MA, we test the 1.6329, we become oversold intra-week, so during the week, and we're going to be stair-stepping a significant prior high as a broken resistance turning support. This is going to be a great place next week to look for a 1 or 2 day reversal to the upside. If we break through here for whatever reason, don't expect it to happen, but if we do and we breach the 1.6143, this is where we become extremely oversold intra-week, and it's the second place I'd be looking for a 1 or 2 day reversal. And again, we have a nice key area in this case of support. Two of them actually we'd be trading into. So if we do break through that, it'd be a good cost average, if you are already long. If you're not already long, and maybe we're just looking at these after the US elections next week, which is likely for me, then, if we break through here with volatility on the election, this could be a good one for kind of Wednesday, Thursday to see if you can get a reversal from below the 1.6143. And the third thing, as always, if we start to track back and then we break back above the moving average, you can look for the bull flag setup and you can look for a rally into next week, the 1.6702. Next euro pair is EurCad. Now, just remember, with the elections on Tuesday, probably going to get volatility across all Forex pairs. So just keep that in mind. I'd like to see some volatility coming in, and I'd like to see this market breaching the 1.4996 next week. If it does that, this market is going to turn oversold intra-week. I can only be a buyer, cannot sell this market next week. This is where I'm going to drop down and start to look for 1 or 2 day reversals in this market with the 1 hour, 50 minute, 5 minute time frames and bullish reversal patterns. And if we breach this for whatever reason, whether I'm already long or not, below the 1.4875, and again we've got some nice support over here. So if I do go long and it blasts through, takes out this lower bound, I'm going to be looking for 1 or 2 day reversal to the upside as a cost average. Maybe I leave it till after the election, it blasts through on the election, and then we get the opportunity to fade it post-election. That would be also a good setup. And the third and final thing in EurCad, as with all the markets, if we break back above the moving average, look at this here, and we pull back into it, and then you get that kind of bull flag set up for the next leg up. You can look at that going into next week, and in this case, if you get that bull flag set up in EurCad, and again, probably going to be looking at this post-election, the 1.5238 is the profit-taking target to the upside once you breach that to the upside in EurCad next week. And the final euro pair is euro-yen. Again, I can either be a buyer or do nothing next week. I cannot short this market. What I like about this market is look at the highs over here. Testing. There's clearly a key area of resistance right here because we're testing it multiple times and then we eventually break through it. And you can see there's also kind of a range bottom over here. And this whole thing here is sort of a consolidation and then you get the breakout. So if we do pull back and we breach the 163.25, not only do we turn oversold intra-week, but we stair-step this significant high over here. So that's going to be a good place. Drop down, we turn oversold, drop down onto the 1 hours, 50 minutes, 5 minutes, look for a 1 or 2 day reversal, looking for those bullish reversal patterns. If we break through there for whatever reason, as unexpected as it is, and we trade below the 160.76, that's where we become extremely oversold in EUR/yen next week, and that's where I'd be looking also for a 1 or 2 day reversal. Whether I'm already long and just cost averaging it for a break even, or whether that's an initial position. And the third and final thing, again, You can look for that fast market. So you start to correct, but then you break out, and it should be clear. You should break back above this with momentum. It should be very, very clear you've got momentum, and then momentum precedes price. And that's where you can look for that intra-week bull flag set up in this case into the 168.24. Once you start to trade above there next week, that's a great place to be booking profits on any long setups throughout the week. Wrapping up the Forex pairs then with the dollar pairs, and look at the ranges on this, pretty wide compared to normal. Why is that? Because of the massive news event we have coming up next week, which is of course the elections, but also we have the Federal Reserve on Thursday. So expect a lot of volatility. The upper and lower bounds have already expanded to account for this because they're forwards looking. It's something I keep saying to you guys, that the levels that are generated in the HedgeDash quantitative trading platform are forwards looking. That's why the levels have expanded this week, because it's taking account for upcoming news events for next week. And that is, something that you're always going to see when you've got these kind of projected ranges. So what the markets are telling you is they're expecting a lot of volatility. When you see the wider bands, that's what they're basically telling you. So going into next week, what I'd like to see is, and I'm probably going to be looking at this almost certainly in the case of the dollar pairs, from Tuesday onwards. In other words, waiting for the elections to take place. Even if the winner is not known on the night, you're probably still going to see positioning taking place. And then on Wednesday, what I'd like to see is if we're above the upper bound, because I can only be short, regardless of the outcome of the election or the Federal Reserve, I can only be short Aussie dollar next week. A breach of the 0.6702 next week turns this market overbought. If we take out this high, this is where, and I'm not going to jump in straight away, but I'm going to start to look for momentum to fade. And then I'm going to be looking for that potential 1 or 2 day reversal. If you get a massive move on election night, you might want to just treat the dollar pairs with a lot of caution, because they may not be perfect for fading. And again, you may want to even sidestep the first upper and lower bounds and just look, if you get big moves from Tuesday, look for potential opportunities for the second upper and lower bounds. So if we blast through here and we take out the 0.6846, and let's say, I've kind of sidestepped this because I'm being patient, or even if I'm involved here and I'm on the wrong side of it, I would be looking for a 1 or 2 day reversal to the downside. I think that would be unlikely because, again, I think I would really prefer to let the volatility take place, after Tuesday, maybe see things to settle down on Wednesday before jumping in. And the third and final thing you can look for next week is we start to pull back, and for whatever reason, perhaps on the election, you get a big sell-off, the dollar rallies, and you get that pullback, into Monday. It's probably going to do nothing. Tuesday, you get the sell-off, and then it pulls back kind of Wednesday into the moving average, and you get that kind of Thursday, Friday bear flag opportunity down to the 0.64155. Next is US dollar CAD. I can either be long or do nothing. I cannot short this market next week. You can see it's been above its moving average the whole way up, and it's kind of lacking momentum. What I'd like to see is this come back down, breach the 1.3793. Again, going to be looking at this after the election next week. And if we trade into the lower bound, this is where I'm going to be looking for a 1 or 2 day reversal to the upside. If for whatever reason we blast all the way down, let's say we get a very bearish outcome from the election and we see the dollar selling off all the way to the 1.3634, and we take out the prior highs over here, this would be a good opportunity to start to look also for a 1 or 2 day reversal. And in fact, again, like I said, sidestepping the first upper and lower bounds on the election and seeing if some of these come to their second upper or lower bounds is quite a good setup post-election next week. And the third thing I'll be looking for is if we start to break down towards here Monday and Tuesday, and then on Wednesday you get the blast higher on the US elections. Again, you can look for the moving average to track higher, pull back, bull flag into the upper bound, in this case at the 1.4112. The final dollar pair is US dollar Japanese yen. Regardless of what happens next week with the elections and the Federal Reserve, I can only buy US dollar yen. I cannot short this market. So if we get US dollar yen, it's already broken below its moving average, which means it's in a bigger correction already. If we start to see this correcting back and taking out the 149.45, this is where we become oversold intra-week. And there's a high over here you can also look at. There's also lows here, and it's quite good when you're looking for a bounce to actually look for places in the past where the market has bounced. Yes, trading into highs is good, but trading into lows is slightly better in a way, because that is a market or a price point in the market which has bounced exactly as you're looking for, you know, on a forward-looking basis or into next week or when you take the trade. So any breach of the 149.45 is an opportunity to start to look for bullish reversal patterns on 1 and 2 days to the upside. If we blast through there on the election and we come all the way down to the 145.90, bear in mind the yen pairs are quite volatile anyway, so you could see some real volatility in the US dollar Japanese yen pair next week. So just bear that in mind, not for the faint-hearted most likely. If we breach the 145.90, this would be the second place. Whether I am long already or not, I'd be looking for 1 or 2 day reversal. And the third and final thing, you can look for that bull flag setup where it breaks back above the moving average after the election takes place. And then we consolidate into the moving average. And then you get that bull flag setup into the 156.54. You're probably, if you're going to trade that, probably going to have to take some risk through FOMC next week, you know, because it's on Thursday. So I expect a big week next week. I expect to see lots of volatility. I'm going to be primarily looking at fading things from their upper lower bounds, and certainly if anything can get to its second upper or lower bound, I'd be interested in. But gold and silver, which we're going to look at next, are likely going to be slightly less volatile, at least gold is, than some of the other dollar pairs and the currencies. So gold and silver next week could be very good opportunities to look at post-election. Okay, so wrapping up the video, as always with gold and silver. Starting with gold, I can either be long gold next week or do nothing. I cannot sell this market. So what I'd like to see is I'd like to see gold coming back, testing the 2669.91, breaching it, turning oversold during the week or intra-week. And again, it would really nicely stair-step these highs over here with this kind of consolidation, correction, breakout. So that's going to be a great place next week. And again, out of all of the dollar pairs, gold is probably where I would rather go to trade with all the volatility around the election and also the Federal Reserve on Thursday, because it's likely to be slightly less volatile than the currencies. So we'll be looking for 1 or 2 day reversal if it turns oversold intra-week. If it breaks through here, takes out the 2603.43 and also takes out these lows, this would be the second place, although I don't expect it to do this. Very unlikely it does it, but in the event it does it, especially as we do have catalysts, that would be the second place. Whether I'm long already or not, I'll be looking for a 1 or 2 day reversal up. And the third thing is if we start to trade down and then we break back above the moving average, so we get a kind of correction, and then you get the correction breakout, you can look for that bull flag setup into the 2802.88. That is the profit taking target to the upside in gold next week. And again, very similar to this, break above, consolidate, and then look at the nice rally that kicks off over here in gold. And last but not least, we have silver. Now, silver is a volatile market. So with catalysts and news events next week, especially with the election and the Federal Reserve on Thursday, if we get quite a bit of volatility, you know, silver could really move. So again, it may be one of those markets, if you're not used to the volatility or you don't want to take that risk, you know, focus on gold over silver because gold will be less volatile. But if we do get a pullback in silver, what I'd like to see is we're already below the moving average, means we're in a bigger correction. I'd like to see it breach the 30.81, especially if it breached this and took out this low. That would be great. But anywhere down here, I'm going to start to look for a potential 1 or 2 day reversal, look for the momentum to fade, look for those bullish reversal patterns. If we blast through down to the 29.17, there's also a nice test over here. Again, this kind of double bottom. We break out, we come back and we test it. This is the second place below here. I'd be looking for a 1 or 2 day reversal to the upside in silver. And the third and final thing, as always, if we start to make our way down and then on the election we get a rally and we see the dollar weakening, you can look for that bull flag setup in silver into the upper bound at the 34.08. But I would imagine next week, if we make it up to there, we're going to push through and probably take out the high over here in silver next week. But bear in mind, with catalysts, could be a very volatile market. I think I prefer gold over silver next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge- platform is included with every GMT membership.